Hey everyone, Chris Hobart here, the Wealthologist. Now today, I'm going to tackle a big Wall Street myth. Cash on the sidelines are going to save the stock market. Spoiler alert, I got to tell you, it's a lot more complicated than that. All right, let's get real just for a second. And I've told you this before, but the era of easy everything, it's over. Sure, inflation is cooling and it feels good, but I got to tell you that the damage with that, it's done. Let's talk about it. See, let's look at the consumer price index. Basically, that's the cost of everything we buy. Well, it's now about 13% higher than it would have been if inflation had stayed on its nice, gentle pre-COVID path. So even if inflation slows back to normal, which is the wish, right? You are still paying permanently higher prices at the grocery store, the car dealership, really everywhere. This is the new normal. Now, guess what? Adjusting to the new normal, that's not really new. Way back when the Fed was created in 1913, bank failures during the Great Depression, it led Congress to create deposit insurance. That started at just $2,500 per account. Not much. Well, today, it's $250,000 per account. Now, honestly, should probably be higher. You see, the M2 money supply, which is the total amount of money sloshing around in the system, it has tripled since 2008. If deposit insurance had kept pace with M2 growth, well, it should probably be closer to about $750,000 today. That's how much money the Fed has pumped into the system. I got to tell you, that's mind-blowing, right? Now, here's where the cash on the sidelines myth comes in. People say, geez, there's so much cash sitting around just on the sideline. Stocks are going to soar once people put it to work. But there's a problem with that thinking. The stock market isn't some giant piggy bank that soaks up cash and magically makes it disappear. When one person buys a stock, the seller gets cash. The cash, it doesn't vanish. It just changes hands. The amount of cash on the sidelines, it doesn't shrink. It just shifts. So is all that cash meaningless? Well, not exactly. You see, when the money supply grows, it pushes the prices of everything up. Stocks, houses, gold, you name it, it happens. But that doesn't necessarily make us richer. If your home value jumps 20%, but your groceries cost 20% more and your paycheck doesn't budge, are you really ahead? Inflation lifts all boats, but it doesn't lift your buying power. And remember, cash on the sidelines, it's been growing for over 100 years. It's not new. It's not magic rocket fuel for the market. Yes, stocks are down a bit from the peak earlier this year. And yes, they could fall further, even with trillions of dollars sitting in money market accounts on the sidelines. Because what really drives long-term stock values, well, isn't available cash. It's earnings, it's growth, it's real economic strength. So the next time you hear someone on TV saying, don't worry, there's cash on the sidelines, I want you to ask yourself, compared to what? And adjusted for what? If you want real financial strategies that cut through that noise, I'm going to encourage you to visit us at hobartwealth.com. We've got your back. And before you go, I've got a question for you. Do you think inflation will stay sticky? Or are we headed back to the good old low inflation days? Drop your thoughts in the comments below, okay? Because we read every single one. If you like this breakdown, hit that like button, subscribe to us, ring the bell so you don't miss the next Wealthologist Weekly. And again, thanks for watching. I'm Chris Hobart, the Wealthologist. Stay smart out there.